Hello friends, today's topic is gratuity. In this, we will be seeing how the exemption under section 10 is to be calculated for the purpose of gratuity. So, gratuity payment is done by the employer for the past services provided by the employee. It is general trend for the employers to provide gratuity, and the gratuity payment is done as per act, which is Payment of Gratuity Act. Payment made by employer in appreciation of services rendered by the employee, statutorily recognized as per Payment of Gratuity Act 1972, and almost all the employers pay gratuity, which is part of the CTC of the employee. So this amount, the gratuity which is received by the employee, is partly exempt under the Income Tax Act under section 1010. So first is, what is the payment? The payment is taxable based on, the exemption is calculated based on the amount received by the employee, whether it's a government employee or a private employee other than the government employee. So if the amount is received by the government employee, then it is fully exempt. Mind you, the amount received during the service of the employee, during the service of employment, is fully taxable, and the amount which is received at the time of retirement or at the time of termination of the services is partly exempt. So if the amount is received by the government employee, it is fully exempt, and if the amount is received other than the government employee, then it depends whether the employer is covered by the Payment of Gratuity Act, whether not. So if the employee other than the government employee is covered by Payment of Gratuity Act, then the exemption is calculated by three factors, which is least of the following: amount of gratuity received, second is amount of 20 lakhs, third is the formula based on which the salary is calculated, the exemption is calculated. The formula is 15 by 26 into last drawn salary into completed year of service. Anything in excess of 6 months will be rounded off to 1 year. On the screen, first part, as you can see, that come retirement gratuity. Retirement gratuity is maybe in the form of retirement, superannuation retirement, or the retirement in the form of termination of services received by the government employee is fully exempt. That come retirement gratuity received by other than employees who are government employees and who are covered by Gratuity Act. So in this case, list of the amount is 15 by 26, which is a formula, last drawn salary into completed year of service or part thereof. So completed year of service should be more than 6 months. Anything more than 6 months is rounded off to 1 year. 20 lakhs and gratuity actually received. In case of seasonal employee of a seasonal establishment, the 15 days is substituted with 7 days. And salary, for the purpose of claiming exemption, salary has been defined under each and every section under section 10. So for the purpose of this clause, the salary is defined as basic salary including DA, which is dearness allowance. That's it, and it doesn't contain any other allowance, which, for example, excluding bonus, commission, HRA, overtime, or any other allowance, benefits, or perquisite. So salary includes only base salary and DA, which is dearness allowance. And the employee who is not covered by Payment of Gratuity Act, instead of 15 by 26, half month's average monthly salary into completed year of service. Completed year of service in this particular case is not rounded off. So even if it is 11 months completed, it will be considered as 0 months or 0 years. For example, if 20 years and 11 months, after rendering services of 20 years and 11 months, gratuity is liable to be paid. So for the completed year of service, we will consider 20 years and it won't be rounded off. So it will be directly rounded off to the preceding number. So in this particular example, it will be 20 years. And if it would have been covered by payment of Gratuity Act, those 20 years into 20 years and 11 months would have been rounded off to 21 years. On the screen, death cum retirement gratuity received by other employees who are not covered by Gratuity Act, half month's average salary into completed year of service 20 lakhs and gratuity actually received. Average salary is nothing but average salary of last 10 months immediately preceding the month of retirement. So if your month of retirement is October, so immediately 10 months preceding to it, which would be from December to September, will be counted, will be average of this month's salary will be computed for the purpose of calculating the exemption. And in this case, the salary is nothing but a standard salary, which is basic salary plus DA if part of the terms of the employment plus turnover based commission. And other points on the screen, as you can see, gratuity received by members of defense services is exempt. Gratuity received during the period of service is fully taxable, as we had discussed earlier. Gratuity received during the period of employment is fully taxable. It could be either government employee or a private employee. It is taxable in the hands of each and every employee. Only if it is received at the time of termination of services or at the time of retirement of services, that we need to calculate the part exemption part, and that too for the private employees. Third bullet point is aggregate amount of exempt gratuity cannot exceed 20 lakhs. Meaning, if in the same year, if you are receiving gratuity from two employers, then the aggregate amount of gratuity in no way cannot exceed 20 lakhs. Also, if in the past years, if you have received gratuity, then the cap will be of 20 lakhs only. For example, from the previous employer, for out of the past services, you have received gratuity which is around 7 lakhs and the entire amount was exempt under section 10. Now, for the purpose of calculation of exemption gratuity for the current year, 20 lakh exemption amount will be reduced to 13 lakhs because the 7 lakh amount exemption was taken previously out of the previous employment. Fourth bullet point, gratuities received by widow, children or dependents is exempt. Now reading the bare act of section 10.10.1, any death cum retirement gratuity received under the revised pension rules. This is nothing but for the government employee. Everything, the subclause 1 is related to the government employees. As we are reading, the death cum retirement gratuity received under the revised pension rules of the central government, or as the case may be, the central civil services pension rules, or under any similar scheme applicable to the members of the civil services of the union or holders of post connected with defense or civil post under the union, such members or holders being persons not governed by the said rules, or to the members of the All India Services, or to the members of civil services of the state or holders of civil post under the state or to the employees of a local authority, or any payment of retiring gratuity received under the pension code or regulations applicable to the members of defense services. Clause 2 of the BAR Act. Any gratuity received under the Payment of Gratuity Act 1972, to the extent it does not exceed an amount calculated in accordance with the provisions of subsections 2 and 3 of section 4 of the Payment of Gratuity Act. So if an employee is covered by Payment of Gratuity Act, then 15 by 26 into last drawn salary into completed year of services, in which case 6 months is rounded off to 1 year. This is what clause 2 says, and further category would be mentioned in subsection 2 and 3 of section 4 of the Payment of Gratuity Act. Subclause 3. Any other gratuity received by an employee on his retirement or on his becoming incapacitated prior to such retirement, or on termination of his employment, or any gratuity received by his widow, children, or dependents on his death, to the extent it does not in either case exceed 1/2 month's salary for each year of completed service, calculated on the basis of average salary for the 10 months immediately preceding the month in which any such event occurs, subject to such limit as the central government by notification in the official gazette, which is 20 lakhs, specify in this behalf, having regard to the limit applicable in this behalf to the employees of that government. Provisos. Provided that where any gratuities referred to in this clause are received by an employee from more than one employer in the same previous year, the aggregate amount exempt from income tax under this clause shall not exceed the limit so specified, which is 20 lakhs. Provided further that where any such gratuity or gratuities was or were received in any or more earlier previous years also, and the whole or any part of the amount of such gratuity or gratuities was not included in the total income of the SSC of such previous year or years, the amount exempt from income tax under this clause shall not exceed the limit so specified, as reduced by the amount, or as the case may be, the aggregate amount not included in the total income of any such previous year or years. So the aggregate amount was not included, meaning in our example that we gave earlier was 7 lakh amount which was claimed as exempt, which wasn't included in the total income of such previous years. So that amount will be reduced from the applicable limit. That means the applicable limit of 20 lakh will be reduced from the amount of 7 lakh, and only 13 lakhs will be available for the purpose of calculating the exemption. Explanation. In this clause and in clause 10AA, salary shall have the meaning assigned to it in clause H, rule 2, part A of the 4th schedule, which is nothing but salary plus DA if the terms of the engagement provide, if the terms of the employment provide, plus turnover based commission. Now moving on to the illustration part. I will read the illustration. Mr. X retired on 15th of June 2019 after completion of 26 years 8 months of service and received gratuity of 6 lakhs. At the time of retirement, his salary was: basic salary is 5,000 per month, dearness allowance is 3,000 per month, out of this 60% of which is retirement benefit. Okay, commission is 1% of the turnover in the last 12 months was 12 lakhs. So we have basic salary, we have dearness allowance, we have commission, then bonus, which is 12,000 per annum. Compute his taxable gratuity assuming He is a private sector employee and covered by Payment of Gratuity Act 1972. So, solution part. First is, since he is a private sector employee which is covered by Payment of Gratuity Act, so the formula would be least of the following, which is, first is 20 lakhs, second is gratuity received which is 6 lakhs, then the formula 15 by 26 into last drawn salary. Salary is nothing but basic salary plus dearness allowance, that's it. So 5,000 basic salary, 3,000 is dearness allowance into 12, or we can say not 12 in this case, 15 into 3,000, 15 plus 3,000, then 15 by 26 last drawn salary into completed year of service. Completed year of service in this case 8 months will be rounded off to 1 year, so 27 years will be completed year of service in this case. So completed year of service is 27, so 5,000 plus 3,000 is nothing but 8,000 divided by 26 into 15 into 27, it is completed year of service. So answer is 1,24,605. So the least of this three is 1,24,615 is the exemption amount as per section 1010. So the gratuity received is 6 lakhs and minus 1,24,615, which is nothing but taxable gratuity in this case is 4,75,385 rounded off. The second part of the question is, he's a private sector employee and not covered by Payment of Gratuity Act. So if it is not covered by Payment of Gratuity Act, then half month salary into completed year of service, half month salary is the average salary of last 10 months into completed year of service, in which case it won't be rounded off to the next number, it will be rounded off to the preceding number of any fraction of months. So the half month salary into average salary of 10 months. So seeing the question again, basic salary is 5,000, dearness allowance should be 60% of 3,000, which is 1,800, and commission is 1% of the turnover. 1% of 12 lakh is nothing but 12,000. This is per annum figure which needs to be done for 10 months, so it will be divided by 12 into 10. So in a solution it would be half months into 5,000 into 10 plus 3,000 into 60% into 10 plus 12,000, which is 1% of 12 lakhs, into 10 divided by 12. So 50,000 plus 18,000, and this is 10,000. 60 and 78,000. 78,000 half should be 39,000 average monthly salary into 26, which is nothing but 10,14,000. Since it is 10 monthly average salary, it should be 10 divided by 10, so it is 3,900 and not 3,000, 39,000. So 3,900 only because the formula is average 10 monthly salary, so we have done into 10 for the purpose of calculating the turnover, and it should be divided by 10, so average 10 monthly salary. Accordingly, it is not 39,000 over here, it is 3,900 into 26. 3,900 into 26, so 1,1,400 is the exemption amount, and it will be compared with 20 lakhs, and the gratuity received is 6 lakhs, which are least of the below. So 1,1,400 would be the gratuity exemption amount, and the taxable amount will be 4,14,000 is the taxable amount in category B, and in category C, as he's a government employee amount is fully exempt, so the entire 6 lakh amount will be exempt in the hands of the government employee, and nothing is taxable. So in this part we have done the first part. The taxable amount is, as you can see, 5,75,385. Second item is, it's here we have mentioned that it is 4,14,000, the exemption amount. Here there is a subtraction error that I would like to highlight over here. So 6 lakhs minus 1,14,000 is nothing but 4,98,600 is the taxable amount. So 4,98,600, which is nothing but 1,01,400 minus 6 lakhs, and the last pointer being the government employee 6 lakh amount is entirely exempt, is fully exempt, so the nil amount will be taxable in the hands of the government employee. With this we come to the end of the gratuity part, which is the partly exemption amount, how is to be calculated under section 1010. In this we have covered whether the employee is a government employee or a private employee. If it's a government employee, the amount is fully exempt. If it's a private employee, then whether the employee is covered by payment of gratuity act or not. If the employee is covered by payment of gratuity act, then the formula to be used is the amount of gratuity received, amount of gratuity received. Second is 20 lakhs amount. Third is 15 by 26 into last drawn salary into completed year of service. Any fraction more than 6 months is to be rounded off to 1 year. Then if the employee is not covered by the payment of gratuity act, then the formula would be half month's average monthly salary, 10 months average monthly salary into completed year of service. Any fraction is to be rounded, cannot be rounded off to the next number, it will be rounded off to the preceding number. And then we have covered an illustration to understand the formula, to understand the amount of part exemption to be calculated for the private employees. Thank you.